Are you wondering how to secure your financial future in a world driven by technology? Have you considered how artificial intelligence could revolutionize your investment portfolio? If you're searching for long-term investments with the potential to change your life, you've come to the right place. Artificial intelligence, AI, is revolutionizing Wall Street, becoming one of the most talked about topics in the stock market since early last year. But this is no passing trend. The excitement is well justified. According to Statista, the AI industry is projected to be worth approximately $184 billion this year, and it is expected to grow to an astounding $826 billion by 2030. That's an annual growth rate of nearly 30%. One of the biggest drivers behind this growth is machine learning, the technology that allows AI to analyze vast amounts of data, identify trends, and predict patterns. Machine learning isn't just a buzzword. It's the backbone of AI's intelligence and potential, enabling the creation of products and services that could reshape industries. For investors, this means there are substantial opportunities to get in early on companies poised to ride the AI wave. If you think you're too late, think again. AI is still in its infancy, with plenty of chapters yet to be written. Some growth stocks have the potential to generate significant wealth for those willing to hold on for the long term. Let's explore two standout AI stocks that could be game changers for your portfolio. CrowdStrike, holding cybersecurity ticker. CRWD has always been critical, but as cyber attacks grow more sophisticated, the stakes are higher than ever. This has created a massive opportunity for next-generation security companies like CrowdStrike Holdings. CrowdStrike's Falcon XDR platform operates in the cloud, leveraging machine learning to detect and neutralize potential cyber threats. It's not just a reactive tool, it's proactive, constantly analyzing data to stay ahead of attackers. You might have heard about a misstep over the summer when CrowdStrike issued a faulty update that caused a global IT outage. While this was an embarrassing incident, the company's resilience is evident. Management is still guiding for over $3.9 billion in revenue for the full fiscal year, representing an impressive 27% growth from the previous year. These numbers show that CrowdStrike's long-term trajectory remains strong. The company has carved out a niche in endpoint security, but is continually expanding its platform. Management estimates its total addressable market will grow to $250 billion by 2029. Despite its growth, CrowdStrike currently captures only about 1.5% of this market, leaving a massive runway for expansion. Financially, CrowdStrike is in an enviable position. Over the past 4 quarters, it has generated $1.1 billion in free cash flow, building a robust balance sheet with approximately $3.5 billion in cash, net of debt. This financial strength positions the company to invest in growth initiatives, acquire complementary businesses, or return value to shareholders through stock repurchases. CrowdStrike's business model is another highlight. The company operates on a subscription basis, meaning revenue is predictable and grows with customer retention and expansion. Its ability to adapt and scale makes it an excellent candidate for long-term investment. However, it's important to note that CrowdStrike's stock isn't cheap. It trades at a premium compared to its peers, measured by enterprise value to revenue. For investors, this means a cautious approach might be best. Consider gradually building a position, especially during broader market downturns. CrowdStrike is a long-term winner with decades of growth potential, making it a compelling choice for patient investors looking to build significant wealth. But before we proceed, here's a question for you. What's the biggest challenge you think cybersecurity companies like CrowdStrike face in maintaining their edge? Comment your thoughts below. What do you think? Can a company like CrowdStrike continue dominating in such a competitive industry? Snowflake. When it comes to AI, data is the fuel that powers machine learning. That's where Snowflake, ticker SNOW, comes in. Snowflake specializes in helping businesses store, organize, and analyze their data through a cloud-based platform. Its services are mission-critical for companies aiming to harness the power of AI effectively. Have you heard the phrase garbage in, garbage out? This couldn't be truer for AI. Without clean, structured data, even the most advanced AI algorithms won't deliver valuable insights. Snowflake ensures that companies' data is ready for AI applications, providing tools to pull in external data from third-party sources via its marketplace. Snowflake's journey as a public company has been bumpy. It went public during the stock market bubble of late 2020 at an inflated valuation. Since then, slowing revenue growth, leadership changes, and competition from Databricks have weighed on the stock. It's currently down nearly 60% from its peak. But this is a case where looking forward is far more important than looking back. One of Snowflake's standout features is its usage-based billing model. This approach aligns revenue growth with customers' data usage, which is increasing exponentially. Snowflake's net revenue retention, NRR, was 127% in its most recent quarter, meaning existing customers are significantly increasing their spending over time. With a growing customer base, up 20% year over year, Snowflake now works with 54 companies from the Forbes Global 2000. These trends point to a strong foundation for sustained revenue growth. In addition to its robust billing model, Snowflake's marketplace offers a unique value proposition. Businesses can seamlessly exchange and leverage third-party data, creating a network effect that strengthens Snowflake's ecosystem. This makes the platform indispensable for companies aiming to gain a competitive edge through data-driven insights. Although Snowflake's stock hasn't performed well in recent years, its valuation has become more reasonable. At its peak, the price-to-sales multiple was a staggering 103. Today, that number has dropped to 16. While this is still higher than many companies on Wall Street, it's a far more realistic valuation, providing investors with a better chance of strong returns as the business grows. Snowflake's role in the AI ecosystem, enabling companies to manage and utilize the ever-growing volume of data, makes it a potential giant in the years to come. With a strategic position in a high-growth industry, Snowflake could be a cornerstone investment for those looking to capitalize on AI's rise. But here's a question for you. Does Snowflake's focus on data management make it a must-have stock for your portfolio? Let us know what you think in the comments. AI's impact on broader industries. It's not just about cybersecurity and data management. AI is transforming countless industries. Healthcare, for example, is seeing advancements in diagnostic tools, drug discovery, and personalized medicine. Financial services are leveraging AI for fraud detection, algorithmic trading, and customer service enhancements. Autonomous vehicles are becoming safer and smarter thanks to AI's ability to process real-time data. These examples underscore the vast potential of AI to disrupt traditional business models and create new markets. For investors, this means keeping an eye on companies that integrate AI into their operations, whether as a core function or a supporting technology. The ripple effects of AI adoption could shape the global economy for decades, offering opportunities for substantial investment returns. The takeaway: artificial intelligence is transforming industries and creating unprecedented opportunities for investors. Companies like CrowdStrike and Snowflake are at the forefront of this revolution, each addressing critical aspects of the AI landscape. CrowdStrike's focus on cybersecurity and Snowflake's emphasis on data management make them strong contenders for long-term growth. The broader AI industry's potential is staggering. Innovations in healthcare, autonomous vehicles, financial services, and more are just the beginning. This industry's ripple effects will likely shape the global economy for decades to come, meaning there are still plenty of opportunities for investors willing to do their homework. Of course, investing always comes with risk, CrowdStrike's premium valuation and Snowflake's competition from rivals like Databricks are factors to consider. However, the potential rewards for long-term investors willing to ride out the bumps could be life-changing. Looking at the table, it's clear that both CrowdStrike and Snowflake are leaders in their respective fields, but their financial profiles highlight different strengths and challenges. CrowdStrike boasts a high market cap of $84 billion and an impressive gross margin of 75.15%, indicating strong profitability and operational efficiency. Its 51 cents earnings per share, EPS, further underscores its ability to generate positive returns, which is crucial for long-term investors. On the other hand, Snowflake, with a $51 billion market cap and a lower gross margin of 65.71%, shows a company still growing into its potential. Despite its negative EPS of negative $3.39, its focus on enabling AI-driven data management places it in a strategic position within a high-growth industry. The revenue disparity between the two, CrowdStrike's $84 billion versus Snowflake's $2.81 billion, highlights their differing market positions, with CrowdStrike benefiting from its established role in cybersecurity and Snowflake carving out its niche in data management. Ultimately, these numbers reflect not just financials, but also the immense opportunities in their respective fields. For investors, this table serves as a reminder to weigh both growth potential and current fundamentals when making long-term investment decisions. So whether you're drawn to CrowdStrike's profitability or Snowflake's future promise, both have the potential to ride the AI wave to new heights. But before you go, here's a parting question. What do you think will be the next big disruptor in the stock market? Let's discuss in the comments below. So what's your next move? Are you ready to explore the world of AI investments and position yourself for future growth? If you found this video informative, don't forget to like it and subscribe to our channel, Simple Investing Secrets, for more insights into building your financial future. Remember, this video is for informational purposes only and is not financial advice. Always do your own research before making any investment decisions.